Hi guys, so today we are going to be studying essay 520, which is on analytical procedures. Now, analytical procedures and test of details are two forms of substantive procedures that we use in our audits. Now, what are substantive procedures? First of all, substantive procedures are used to audit the numbers that appear in the financial statements. For example, if we have expenses of 5 lakhs, so running a we will run a sample. We will first obtain the entire population of 5 lakhs, then we will draw samples from this population of 5 lakhs, and then we will test the samples that we have rolled out, right? So that is substantive procedures. Substantive procedures are auditing the numbers that appear in the financial statements. Along with this, we also have control testing, which is auditing the controls that are implemented in the process, which helps us to ascertain if the controls employed in the processes are effective or not. Now, substantive analytical procedures is again another procedure used to test the numbers that appear in the financial statements. But how do we use this practically? We use it by drawing comparisons between two corresponding periods, like let's say quarter 1 of June to quarter 1 of June last year, or maybe let's say we can draw a comparison between quarter 1, quarter 2, quarter 3, quarter 4, to understand the variance that has happened, the variance that has occurred between different quarters. It can give us an idea, a bird's eye view of what kind of variances have occurred between the four different quarters. For a seasonal business, if you see, the revenue could be very high in certain quarters and it could be very low in certain quarters. So this kind of substantive analytical procedure can help us to identify this very quickly. And you can also draw comparisons between the company data, the company numbers, and the industry data. You will get the industry average data, the industry ratios. You can compute those same ratios for the company and then compare those ratios between the company and the industry to understand the reasons for the variance that the company is having with the industry. If the company's ratios are better, I think that would be a good thing. But if the ratios are not doing very well, then you could identify the reasons for this variance. Okay, now like every standard has set out some objectives for the auditor. So what are the objectives of the auditor as per SA 520? There are two objectives: to obtain relevant and reliable audit evidence when using substantive analytical procedures. The meaning of the term relevant and reliable, these two terms together are known as appropriate. The term sufficient, appropriate audit evidence, in that appropriate means relevant and reliable. So to obtain appropriate audit evidence when using substantive analytical procedures, which we will call as SAP in short, point number 2 is to design and perform SAP towards the end of the audit to form an overall conclusion as to whether the FS are consistent with the auditor's understanding of the entity. So now what is this point saying? This point is saying that during the audit, the auditor would have obtained, the auditor will form an understanding of the entity throughout his audit. So in the end, he should apply SAP, he should apply substantive analytical procedures and try to develop an understanding from this SAP and confirm that this understanding matches with the understanding that he has drawn throughout the audit. So to design and perform SAP towards the end of the audit to form an overall conclusion as to whether the FS are consistent with the auditor's understanding of the entity. So you have two procedures, two objectives. First is to obtain appropriate evidence. Second is to design SAP towards the end to confirm that the FS are consistent with the auditor's understanding of the entity. Now, second question is meaning of analytical procedures. Now, what is analytical procedures? Analytical procedures means the evaluations of financial information through analysis of plausible relationships among both financial and non-financial data. So you can have relationships between financial data, for example, other expenses of current year to other expenses of previous year. That would be a relationship between two financial numbers. Or non-financial data, like you could have the comparison of the number of employees on the payroll this year to the number of employees last year, and that would help you to identify if the payroll cost should rise or the payroll cost should go down. So analytical procedures means the evaluation of financial information through analysis of plausible. The meaning of the term plausible is reasonable. We have to make reasonable comparisons. We cannot make unreasonable comparisons. Like other expenses has to be compared with other expenses of the previous year, or even like 2 quarters, we have to compare similar numbers to similar numbers of the previous quarter. The reason there has to be reasonable comparison. Also, let us say in some quarter an unexpected, or you have had some unexpected windfall, or you have had some unexpected event that has completely affected the financial statements. So if you go to now compare those, that quarter financials with the next quarter, that is not going to be a reasonable comparison, since one quarter financials have been affected. That is why. So you have to make a reasonable comparison. Point number two, it also includes the investigation of identified fluctuations from expected values by a significant amount. So in the first case, you will first compare two periods or two numbers. You will compare. Now you will get some difference. You need to investigate the reason for that difference only if the difference is of a significant amount. If there is a very small difference, you may just choose to ignore it on the basis of materiality. But if there is a difference of a significant amount, you will have to investigate the reason for that variance. Point number three, the choice of procedures methods is a matter of professional judgment. So there is no correct, or there is no the choice of procedures or methods that the standard prescribes. That is a choice that the auditor will have to make, taking into account the financial statements, the type of entity, and so on. Next question, how do we apply substantive analytical procedures? Point number one, determine the suitability of SAP for particular assertions while considering risk of material misstatement. So while you are doing your early planning only, while you are considering your risk of material misstatement for every caption, that time only you determine if you would like to apply substantive analytical procedures for some captions. Evaluate the reliability of data from which auditor will build expectations. And this is again very important step. You have to compare two periods in a substantive analytical procedures. So you have to ensure that both the sources of data are reliable. Point number three, develop an expectation of recorded amounts or ratios and evaluate whether expectation is sufficiently precise to identify misstatements. So what are they saying? Once you get two amounts, then you try to develop an expectation of the other amount. Or let's say you get one amount, you have got the last year's number, you try to estimate this year's amount by whatever information you have. You try to estimate this year's amount, and then you check whether the actual amount this year matches with this year's expectation or not. Fourth is determine the fluctuations between the expectation and amounts actually recorded. So this was just like what I said, between the expectation that you have drawn up for this year and the amounts that are actually recorded, try to determine why there are fluctuations and what is the reason for such fluctuations. So the first is determine the suitability of SAP for certain assertions when you are doing your ROM assessment only. Second is evaluating the reliability of data, the source of data from where you are going to build your expectations. Third is develop expectations from the data that you have received. And fourth is determine why there are fluctuations between the expectations and amounts actually recorded. Now, next question. This is an important question. How do we investigate the results of analytical procedures? Or another question is, if we identify fluctuations between expectation and recorded amounts, how do investigate such differences? So how do we investigate the reasons for differences between the expectations and the actual amounts? And this is a very important part of SAP, because you will always have certain variances, and these variances you will have to investigate as to why these variances are, to be able to get sufficient appropriate audit evidence. So what is the auditor supposed to do? The auditor shall, point number one, inquire of management and obtain sufficient appropriate audit evidence relevant to management's response. So the first thing you will have to do is you will have to go to the management and ask them as to why this variance is coming, and the management's response you will have to adequately document. Point number two, perform other audit procedures as necessary in the circumstances. So let us say in other expenses between last year and current year, you're just getting a 2 or 3% variance. So this you can ignore. But let us say there are certain captions where you're getting a 20% variance, a 30% variance. So you can perform additional procedures to understand why there is a difference in those numbers only. Now, what can be additional procedures? Let us say if you are getting a big difference in payroll expense, that is employee benefit expense, then you can disaggregate that caption. You can break it down into salaries and wages, staff welfare expenses, contribution to benefit funds like gratuity, pension, etc. And you may have even ESOP cost, that is your share-based payment cost. So you can disaggregate, you can break down employee benefit expenses into those four captions, and then you can compare sorry, then you can compare the values of the previous year to the current year and see as to in which particular disaggregated caption you are getting a big difference, and try to analyze why the difference is coming in that particular disaggregated caption. Next question is nature of analytical procedures. Analytical procedures include comparison of entities' financial information with point number one, comparable information for prior period. So you can have comparable information for prior period. Number two, anticipated results of the entity based on budgets or forecasts. So this point number two you can use to build expectations of the current period amounts. You can take the budgets or forecast that the management has drawn up in the start of the year or the period, and you can use that to build expectations. Point number three, similar industry information, that is comparison of the entities ratios to industry ratios. This also we spoke about. So there are three ways you can apply analytical procedures. That is comparison between prior period, then anticipated results of the entity through budgets and forecasts, and third is comparison with industry information. Now, they could also include the consideration of relationships, point number one, among elements of financial information that is expected to conform to a predictable pattern based on entities' experience, example, depreciation. So, depreciation will move along a particular line. Depreciation could be 10% every year. So, if it's 10% every year, it's going to be 10% lesser this year than previous year if the method is WDV. So, this is going to conform to a predictable pattern. So, you can also consider depreciation for substantive analytical procedure. Point number two is between financial and non-financial information, example, payroll cost, number of employees. So if you see the number of employees has gone up this year, but the payroll costs have decreased this year, so that could be a sign of some kind of misstatement, because if the number of employees is increasing significantly in the current year, the payroll costs also should go up. So this can be a reason where this can be a situation where you can identify and investigate why there is a fluctuation. Next question, how to determine if data used for SAP is reliable. Now we had seen in the answer about that the data used for SAP, from where it is sourced, it should be relevant and reliable, right? So now we have to ensure that the data that we have got for SAP is reliable. We need to ensure that. So how do we do that? So there are 4 points. Number one, source of the information available. Information may be more reliable when it is obtained from an independent source outside the entity. So whenever you obtain information independently, that is always going to be more reliable than if you are depending on some other person to obtain information. Information that you obtain first hand from somebody is always going to be more reliable. Point number two, comparability of the information available. For example, broad industry data may need to be supplemented to be comparable to an entity that produces and sells specialized products. So let us say there is a company which is selling very specialized products, very customized products. Then if you take up that industry, the industry in which the company operates, that industry ka data, and try to compare it directly with the company, that may not be a fair comparison, because the industries is a very broad data, whereas the company is selling very specialized and customized products. So you may have to supplement the industry data with some other specialized data in order to be able to make a fair comparison. Point, so the information should also have comparability. The number one point for reliability is source of the information. Number two is comparability of the information available. Point number three is nature and relevance of the information available. For example, whether budgets have been prepared as results to be expected or goals to be achieved. Now this is also a very important differentiation. Sometimes some companies prepare budgets as targets. They want to obtain these targets, but these targets could be very unrealistic. But sometimes budgets could be, they may prepare budgets that are actually achievable. Budgets can be made just as targets, as unrealistic targets, or as something that can actually be achieved, goals to be achieved. So you have to also consider this. If the budgets are unrealistic targets, you will have to lower the budget amounts when you are building up expectations. But if the budgets are something as goals to be achieved, like you feel, the company feels that this is actually achievable by the company personnel, then you can use those only to build up your expectations. Point number 4, controls over the preparation of the information that are designed to ensure its completeness, accuracy. So we saw the point number 1 was source of the information available. Now point number 4, controls over the preparation of the information. So the information, the way it is prepared, most information would have been prepared through some IT systems. So you will have to ensure that the controls over those IT systems are designed appropriately in order to check the completeness and the accuracy of the information. There should not be any errors in the data that you are using. It should not be manually editable, and there should be tight controls over this information to ensure the completeness and the accuracy of that information. Next, last question of this essay 250, how to evaluate whether the auditor's expectation is sufficiently precise. Now how do we determine? Now see, for essay 520, one part is where we can expect, when we can build up expectations of the amount, and then we can check if the actual amount is similar to our expectation. Now how do we know that the expectation that we have built is reasonable, is sufficiently precise? It means that it is reasonable, it makes sense. It cannot be some kind of wayward expectation that we have built and the actual amount is varying totally. It has to be some kind of reasonable expectation of amount that we are building up. So how do we determine that? Point number 1, the accuracy with which results can be predicted. So for certain captions, you may be able to predict the results more easily. For certain captions, it's going to be more difficult. So over there, it may not be appropriate to sort of build an expectation and then checking the actual amount with that expectation. Point number 2, the degree to which information can be disaggregated. So like I said, for salaries and wages, for employee benefit expenses, you may disaggregate the information, disaggregate the caption, break it up, and then you may estimate amounts for each disaggregated part. Now for some parts, it may be more easier to kind of predict, like salaries and wages. You can just see how many employees have increased or decreased over the year, and then you can apply a similar percentage to the salaries cost. But it may not be the same for, let us say, share-based payments, which are only issued to top management personnel. So you may have to actually obtain real data as to whom it has been issued in the current year, or if at all it has been issued to anyone in the current year. Point number 3, the availability of financial and non-financial information. Now obviously, to kind of build an expectation, you need some kind of financial or non-financial information to build an expectation for the current year. Somebody will have to tell you that this caption has not undergone any change in the current year, so you can just add maybe a 2 or 3% kind of fluctuation. So you require some kind of information, and the availability of that information is important for you to be able to build up a precise expectation. So this is all about essay 250. We are done with essay 250. I hope you all have been able to understand essay 520. Sorry, my mistake. Essay 520. I hope you all have been able to understand essay 520 well. Please do subscribe to my channel. Please do like and comment this video if you have liked this video. Please also do follow my Telegram channel. All my notes are published on my Telegram channel, so you can always find any of the notes on my Telegram channel. The username is CA Newton Lobo. Thank you for watching this video and see you in my next video. Bye for now.